Farm debt has hit nearly $562 billion, and it's still climbing. The question a lot of people have, though, is what does this actually mean for you, your farm, and ultimately your family's future? Now, if you feel like you're working harder than ever, like honestly everybody does today, but you still don't feel like you're actually gaining any traction, then this big number that we're talking about honestly explains a lot of that. Inside of today's video, we're going to break down in detail what's actually driving this debt explosion that we're experiencing inside of the ag industry, and ultimately how it's affecting family farm operations just like yours and what you need to do in order to prepare for and ultimately protect your future. Now, one of the things that's irritated me the most over the years is that you'll hear a lot of the mainstream ag media spin this big number like it's a positive thing, right? Like the ag industry is growing, like it's this good debt that we're taking on inside of the industry. And that couldn't be farther from the truth, because the hard and uncomfortable truth is that most family farm operations aren't growing. There's a reason we have a number of family farms going out of business every single year, and it's in the hundreds. Some years it's even in the thousands. But again, we like to spin it like it's this great thing that's happening. But the truth is, family farm operations are just going deeper and deeper into debt and ultimately becoming more and more enslaved to their financial institution. Now, the first thing we need to focus on is what's actually driving this massive increase in overall ag debt or farm debt that we have there. And to simplify it for any of our viewers here today, it really is broken down into two key numbers. There's going to be real estate debt, and then there's operating note debt. Now, one thing that I've consistently talked about with our members inside of Legacy Farmer, and just anybody really that wants to talk about it in general inside of the ag industry, is that when you look at a graph here, it shows this consistent and steady incline in overall farm real estate debt. But if you look at operating lines, those are staying the same. Now, I don't know about you, but I haven't heard a lot of farmers telling me that they've just been making a killing over the past 5 to 10 years. And typically, out of any 10-year period, family farms are profitable in a big way, maybe 2 years out of those. And they expect those big years to hopefully cover the losses from the prior years. And that's where, when I talk about that chart, that's where the numbers don't really make sense, because the reality is we know that farm operations have been losing money consistently the past 5 to 10 years and beyond. Further than that, I know that, but I'm just talking more in immediate terms here. We know that farm operations have been losing money. And the thing is that money is sitting on their operating line of credit at the end of the year. And so if you're in the position where you lost $300,000 last year, that's sitting on your operating line of credit, and you're getting ready to buy the next year's inputs or prepay for anything going into the 2026 crop season, where are you coming up with that money? Well, if your operating line of credit is still tapped out because you have losses sitting on it from last year, what are you going to ask your banker to do, or what should they be pushing you to do? They're going to take those losses and term them out against the equity sitting on your balance sheet, which for a lot of people is farm real estate. That is why when you look at this graph, you see farm real estate steadily going up, right? And that's how we get to this massive $562 billion number of debt inside the ag industry. But you'll see operating lines staying level. There's a reason for that, my friends, because more people than not are losing money consistently every single year farming. Main point being because they don't know their numbers. They're not tracking them at the level of detail that we demand of our members here inside a Legacy Farmer. And ultimately, that's contributing to this increasing debt problem that we have inside of the industry. But again, the mainstream ag media will try to spin it and say, well, it's great. The ag industry is growing. More and more people are buying farm ground. The reality is banks are just moving a lot of losses that are taking up space on customers' operating line of credits and terming it out against their long-term real estate. So for you as the borrower, this is a very bad position to be in, because you only have so much equity that will last you only so long before the bank actually has to foreclose on your operation, or you sell out and just get out of it altogether. But for the bank's position, though, it doesn't really matter to them, because they're honestly de-risking their position with you when they're able to move money off of your operating line of credit and secure it with your farm real estate that they could easily sell, will easily maintain its value and things like that. That's why it's so critical for you as a farmer to understand how your balance sheet is structured and why it's structured that way, right? And that why is a very important reason there that I found over the years. A lot of our customers that have come into Legacy Farmer, and we've had hundreds of them, ranging from big operations to small operations. I'm talking big, like $45 million big per year in revenue. And all of them, we had to go through this foundational education piece there where we're really educating them on how the balance sheet is structured and why it's structured that way, because there are incentives there backed up on why it's structured a certain way. And if you don't know them, for both parties, incentives for you as the borrower and incentives for your bank as a lender, you're going to get taken advantage of, or that's what we've consistently seen over the years. Now, most of you watching this video right now if you've been through that type of experience, you know exactly what I'm talking about. But also too, it may have just opened up some additional doors for you as well onto what's actually happening on the other side of this. Maybe it's with your bank and why they're wanting to term it out against real estate and things like that. But a lot of our customers over the years, we've been through this time and time again, literally hundreds of times with customers. And the thing is that I'm always focused on with our customers is, yeah, we can restructure maybe 1 or 2 years, but I want to be very strategic and detailed in what I am actually giving up. What equity on your balance sheet are you actually giving to the bank as collateral? And at the end of the day, I'm going to fight as hard as I can to not give up farm real estate as much as I can. Right now, a lot of you may have equipment or something like that sitting on your balance sheet and you have a lot of equity there. That's great, but the bank is only going to give you a 5 to 7 year loan there versus giving them your real estate. Man, it makes it sound like an easy decision and a win for everybody because you get to term out those losses that were most likely achieved in 1 year, those losses, and now you get to pay those off over a 20-year period. Tell me how that business model makes sense. It just doesn't. So it's up to you to really understand how the balance sheet's structured, why the bank wants your farm real estate, and ultimately, once you understand those two things there, you're going to look at your balance sheet completely different. It's going to change everything about every decision you make going forward here, and we've seen that time and time again. Once we bring in these family farm operations to Legacy Farmer and our coaches lead them through this process, their eyes open up and they're literally never going to run their business the same ever again in the future. Now, the second important topic here that I want to talk about inside of today's video is really around this place of getting taken advantage of by your banker, right? A majority of farmers, when they do lose a substantial amount of money in 1 year, their only focus is on being able to farm next year, right? And if they're actually going to be able to, if the bank's going to renew their operating line of credit and things like that. So when you go into your banker and you have this $300,000 loss sitting on your operating line from last year, the way that it's always been spun and made to look a certain way is that when the bank terms out those losses for you, you feel and they position it like they're doing you a solid, right? But the reality is, though, like I said, they're actually de-risking their overall position with you. And the more real estate they can actually get from you, the better it's protecting the bank. And I can't blame them. If I was in their shoes, I would do the exact same thing. Their incentive is to loan out money, produce a return on investment in the form of interest income, but also at the same time, making sure they're protecting that money and that risk they're taking with the most highly valuable and stable assets that you can possibly offer, which for everybody is going to be your farm real estate. And so you have to understand what are the bank's incentives, but also too, what are your incentives and how are you making sure that you're protecting your interests as well while serving theirs, right? I know we got to sometimes lend more than we want to or give up more than we want to, but each situation is different here. And that's what we've learned over the years with our customers coming in. It's always a question of, well, how much collateral does the bank have? That's the first question. And then how much do they actually need to protect their interest? And what we found over the years is that these banks actually have a lot more collateral than what they really need to protect their interest. But again, if you don't know how the balance sheet's structured, why it's structured a certain way, and how to use that to your advantage there to make sure you're putting yourself in the best position to win, you're going to get taken advantage of. And the foundational problem here is that when you have disorganized and chaotic financials, you are definitely at risk to getting taken advantage of because you don't know what you don't know. Your numbers aren't actually telling you what's really going on because you don't know how to structure and organize them. But then also too, you don't have anybody in your corner explaining to you what's going on for both parties here. And this is where inside of Legacy Farmer, what makes our program so valuable for members coming in is that a majority of our business coaches have banking backgrounds, right? They were on the other side of it. And we had a customer come in not probably 2 or 3 weeks ago. After his first call, he goes, "This is great. I'm getting the banker without the bank." All right. That was so profound to me and so powerful to me because most customers, when they're walking into the bank, they're expecting their loan officer to be their business advisor. And guys, that couldn't be further from the truth. And I'm not saying some loan officers don't have the qualifications to do that. Some of them do. It's a very small percentage, but it's not their job, right? It's not their responsibility. It is your responsibility to make sure you are surrounding yourself with the right people that are going to give you the sound business advice based off of truth and based off of experiences, not theory that's coming from your bank sitting behind, a desk or whatever that may be there, right? And so I've always tried to make sure we're focused on that, but we built our program around really exposing the back end of the banking operation there so that you really understand how they're using your information to make critical decisions. But there's no way for you to actually know that until you get your numbers structured and organized. So if you want to make sure that you're always putting yourself in the best possible position to win long-term, whether that's negotiating interest rates, whether that's getting a piece of ground bought fast, being able to take advantage of an opportunity really quickly, making sure your loans are structured correctly, making sure your balance sheet structured correctly, just making sure you're in a position to win. It starts at the foundational level of getting your numbers structured and organized, knowing how your balance sheet works, knowing how it fits in with your cash flow, knowing what your break even is on each crop that you're raising, or livestock or whatever that is there. You have to be a master of your numbers there in order to win in today's economic environment and ultimately make sure you're not getting taken advantage of. So over the years, I started Legacy Farmer back in 2019, and we have worked with literally we're nearing 500 family farm operations from across the country. We've talked with more than 3,000 of them. What's funny is the same foundational issues are in every single operation. No foundational structure for finances or business structure and organization or operational organization and efficiency. There's all these just same foundational issues there. And we built our entire program with those customers over the past 5 or 6 years. And we know it works, right? Because everything that we've done, none of it is theoretical. We built a product, we tested it with our customers, made sure that it was simple and easy to use, but also too gave them the clarity and the confidence and the certainty that they want when it comes to knowing their finances at a detailed level. And more than that, knowing what decision to make, right? Because so many people, they rely on other people around them, whether that's their banker or their accountant, somebody that's not involved inside the operation, and somebody who has different incentives there as well, to where they're not truly lined up with that family farm operation as well. And so when you have the numbers structured and organized in this way, and you know how each party, whether it's your banker or your accountant, is going to use those numbers in their system as well, you just know how every piece of the game works here. Man, now you're in a position to make sure you're making a good, confident, sound business decision, but also too, you're confident that you're putting yourself in the best position to win. And that is our entire focus at Legacy Farmer and what we've been doing with hundreds of family farm operations from across the country over the past 5 or 6 years. And over time, we've begun to start calling this the Legacy Farmer Proven System. Now, if you want to learn step by step how that proven system works and how it can positively impact your farm operation and help you get from where you're at, which is most likely not where you want to be, to the place where you want to go, then click the link below this video. I have a free training there where I'm going to walk you through step by step exactly how it works and how we've helped hundreds of family farm operations over the years get clarity, confidence, and structure inside of their finances. So click the link below and we'll see you in the free training.